The news around Boeing and Boeing stock just does not seem to end these days. I've tried to keep you guys updated as best I can with all of the news surrounding this company, and today we have three more pieces of information that I think pretty much solidifies Boeing's future, at least for the short to medium term. This very well could change your fundamental view on the company and that investment if you do have an investment in Boeing. So make sure you stick around for this video because it's going to be an interesting one, guys. And as always, if you enjoy this content, drop a like down below to support the channel so I know that you guys find value in these videos and I can create more videos just like this. So let's start off with the bad news here per se, because the good news that we have to cover a bit later on is going to be much more relevant and actually does make fundamental differences in the company. So we got some big news here that both Boeing and Airbus, which in reality is really Boeing's only other competitor, both lost $3 billion in orders for March. So in March, the two companies reported that they received 91 gross orders, and this is down versus the 102 orders that they got during the same month last year. Out of these 102 orders, only 31 were from Boeing, so Airbus did get around 2 times more orders than Boeing. And this may seem like a big blow to Boeing. However, if you read the last sentence here, on a dollar value, the tallies for the month were more or less even. So even with half as many orders, Boeing will be pulling in the same dollar value as Airbus. And honestly, this should be understood because investors fear that Airbus will take away money from Boeing over time. But clearly, despite the issues that Boeing is going through right now, they are still pulling in the same dollar value as Airbus, which to me signals a very strong brand and product offered. And of course, once things eventually do get better, like I think they will, Boeing will start pulling in even more money as their customers start to rebuild the confidence in the company. Now, more specifically, this is how the 31 orders break down for Boeing, and the total that we have here is $4.3 billion in gross orders value in March. Now, I did mention this in a previous video, but they lost $7.5 billion worth of orders in March as well, from canceled orders and such. So in the grand scheme of things, they were down $3.2 billion in bookings orders from March. And guys, it is what it is, and during this global issue, I expect this to continue into April, May, and probably even June as the industry stabilizes and air travel starts to slowly pick up demand once again globally. Okay, good. So we got the bad news out of the way. Now let's start with the fun stuff. Let's start with the optimistic news here. And this comes from a very well-known firm, Goldman Sachs. So Goldman Sachs actually raised the price target on Boeing to $209 per share, showing that they see a good amount of upside from the current price that's around $130, $140 per share. So Goldman Sachs upgraded Boeing from $189 per share and put a buy rating on the company. And the reasoning is because while the stock is currently struggling and there's much more bad news than good news currently, they believe that the expectations set for Boeing are just too low, and that gives them a good opportunity to beat those expectations if things start to stabilize. Now, I'm on the same wavelength here as Goldman Sachs, surprisingly, because I believe at this point the market is pricing Boeing like it's an irrelevant company. But come on, guys, Boeing is one of the two global giants in the airplane manufacturing space, and airplanes are not going anywhere anytime soon. So unless you think Tesla is going to come out with some electric airplanes sometime soon and disrupt this whole industry, I think that Boeing's position here is fairly stable. And really think that Boeing has no potential ahead of it is being very short-term sighted, because in my opinion, Boeing is going to fulfill those $439 billion in backlog orders over the next decade. And like I mentioned many times, we're seeing orders come in even during these tough times. So once things stabilize again and the economy starts growing again, Boeing is going to be directly benefiting from this as airplane operators around the world look to refresh their old fleets of planes and purchase new planes from Boeing. And just a little bit of information here on this note, Boeing just completed their first test flight for another Boeing 777X, and this is going to be one of their flagship planes, and things are going very well here for the company. So the future is looking very bright for Boeing with this line of plane as well. These flights are scheduled to start being delivered sometime in 2021. So like I've mentioned a few times, I believe 2020 is going to be the bottom here for Boeing. And as we get out of 2020 and into 2021, we will start to see tons of good news come out of Boeing. And we'll be looking back at this company today at these stock prices and wondering why we didn't pick up more shares at these cheap valuations. Now, it may not be as drastic, but it could be a very similar situation as to what Tesla went through recently. Just about a year ago, investors were extremely pessimistic on Tesla, pushing the price under $200 per share, but then eventually reality set in and investors realized the stock was very underpriced, and that shot Tesla up all the way above, what, $700-800 per share right now. So now I'm not going to sit here and say that Boeing is going to have the same thing happen to it, because it's not going to happen the same way for Boeing. However, there could be some sort of similarity here where the stock is just beaten down way too much in the short term. Things will turn around eventually over the long term, in my opinion. So current prices of $130-140 per share is just too cheap for Boeing. Let's also not forget that in good times, Boeing is a very profitable business. You can see in 2018, they pulled in over $10 billion in profits, and this was before all of the issues hit them. Now, when you're looking out longer term, this is positive because my thesis is that once things eventually stabilize, Boeing will get back to these levels once again, and most likely past these prior levels, making this a worthy long-term hold for me. Now, the biggest piece of news I want to cover was around the new debt that Boeing raised. There's no secret out there that this company was facing some tough times. Bankruptcy was on the table, but now with this new news that we just got here, that's pretty much not going to happen anytime soon. Boeing announced that they raised $25 billion, and this rules out any sort of requirement for government aid, and also rules out, like I said, the likeliness of bankruptcy. In an official statement from their website, they said that they're looking to keep liquidity flowing through their business and also looking to support the 17,000 companies in their industry's supply chain. There are tons of giant companies that rely on Boeing as well for a big portion of their revenue. And I'm talking companies like 3M, Honeywell, General Electric. So all these companies are going to benefit greatly from Boeing succeeding here. The company also stated that there was robust demand for the offering, which is something that their CEO touched on a few weeks ago, and this shows the strong support for the long-term strength of Boeing and the aviation industry as a whole. Now, many people doubted the CEO when he made the statements around Boeing, and that they had other options to raise capital instead of taking government aid. And I'm glad they stuck to their guns here, because as an investor, this gives me tons more confidence in the new CEO that he will actually stick to what he says. Now, because of all of this and because they were able to raise this money, they do not plan to seek any additional funding through the capital markets or through US government options at this time. And this leads me to believe that they have enough capital now to keep the company going. The $25 billion that was raised is going to be across 7 tranches, and maturities will range from 3 to 40 years. In fact, guys, around $16.5 billion of this raise is going to be in the form of 10-year plus bonds, and this signals that investors are comfortable betting on Boeing for the long term to get things sorted out. Now, keep in mind, should things continue getting worse and maybe this issue goes on longer than expected, Boeing runs through all of this additional money that they raised, they still have another option. Now, because of the $2 trillion relief that the government released, Boeing is actually eligible for loans up to $17 billion of that if it needs it. Now, I suspect this won't ever be used, but it is a cushion that the company can fall back on if things get bad once again. So pretty much what this means, guys, is that Boeing can once again start focusing on their business, on growing their business, on really delivering for their customers, as opposed to wasting time figuring out how they're going to survive through this global crisis. Unfortunately, for the short term, Boeing said it plans to cut payroll by around 10% through voluntary measures and involuntary layoffs as necessary. So out of their 160,000 employees, this would mean around 16,000 jobs that will be lost because of this crisis. It is unfortunate, but until global demand really picks back up and their customers are financially sound once again to start making purchase decisions, Boeing needs to cut costs and production where necessary for the overall health of the business. The company is currently sitting down 58% year to date after these issues, and down over 68% from its all-time high that it hit about a year ago. This sell-off was mainly driven by the fundamental issues that they had prior to the global issue, and of course in the last month or so with the fear around bankruptcy. But now that things are starting to clear up for the company and the issue as a whole, and there's a bit more certainty on how we're going to progress through this and get back to normal, I believe at current prices Boeing is extremely oversold. Now, if you're like me and you believe in the long-term outlook for Boeing, you believe that Boeing is going to be a much larger, stronger company, say 5 to 10 years from now, then you're most likely in the same camp as me to believe that current prices of around $140 per share is extremely cheap. You don't really get an opportunity too often to pick up shares in a business where you know they're one of two global players. They pretty much have a duopoly. Their future is pretty much set with the amount of backlog orders that they have. And all that really needs to happen is for the industry to start opening up once again, allowing people to fly once again, and things will slowly start to go back to normal. Yes, it's going to be a slow, long road to recovery, but the point is that that recovery is not something that we're just hoping, and it is something that I think is most likely a reality here for Boeing. So really, I would say that Boeing is kind of a no-brainer investment for me, especially at these prices. But guys, I know a lot of you disagree with me. A lot of you think Boeing is going back under $100 per share or something like that. But either way, let me know in the comment section down below what your thoughts are here on Boeing today after all of this new news. And let me know if your fundamental thesis on this company has changed now that you know the financial strength and position of the company. Guys, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.